That's why anyone who's a Bitcoiner thinks decades ahead, and then they just ride through the volatility. That volatility is not what hedge funds can endure.
Yeah. It's fascinating when you think about, they're basically like PvP against each other, and it's a relative performance game. And so everyone actually gets into this world of like, I think it's Howard Marks, like you don't want to be the top investor in a year because you took so much risk. You could have been the bottom. You kind of just want to be like above average, right? Just do that over and over again for 30 years. And then you'll end up being good.
Yeah.
Whereas retail folks, I don't know if they care about volatility. I don't know if they care about drawdowns. I don't think they care about correlations or portfolio construction. It's just pure outperformance and alpha generation. And in a weird way, like that's kind of what investing was in the beginning.
And that's what a lot of the original hedge funds were. They were, you know what I mean? They saw the world differently. They took big risks. I mean, Michael Burry is arguably in his early days was a retail investor when he made the Big Short. I mean, all these were big, long cycle bets, you know?
Yeah, it's pretty interesting. What about gold? Gold's been on this historic run. Do you think it's real? Do you think it's manipulated? Do you think it can continue?
I mean, there's a lot of reasons gold probably is going up. And at Fundstrat, we don't do commodities. I kind of regret not recommending gold because it's been so great. I mean, because, you know, like generally, I like to be helping our clients be involved with things that are going up. So I think gold's move is like
a good strategy.
Yeah, exactly. I don't want to fight it. And like,
what kind of business do you have? I help our clients' portfolios go up.
Yeah. So gold's been amazing. I think what's really stood out is that you can explain gold's move by just pure technicals. Like I was talking to our technician, Mark Newton, yesterday, and he says that gold had a cup and handle pattern that the breakout was July of this year. And so the measured move should have taken it up to where it is now. But let's say price leads fundamentals. I think that July is also the time that the stablecoin industry started printing a lot more creations. And as you know, there's been gold stablecoins and dollar-based stablecoins, but a lot of the dollar-based stablecoin issuers are over-collateralized. So I think the stablecoin industry has been printing a lot of dollars, they're over-collateralized, and I think they've been buying a lot of gold. So I think that the stablecoin industry has been the newest bid for gold.
More so than even like a China central bank?
Yeah, because they've already been present. The central banks have been present for some time, but there's somebody new buying gold on top of the retail buying gold. And I think that would be my guess because, you know, like I've now there's like 7 or 8 gold stable coins, plus, you know, there's big stable coin issuers. And so that could be the bid to gold. Now, does that mean gold is unlimited on the upside? I don't know. I mean, I'm not studying it, so I don't know. But I think it's very bullish for Bitcoin and Ethereum because...
Why?
Well, gold moves first and then Bitcoin catches up. So I think that there is going to be the network value of gold just went up by a lot. And so let's say gold settles at 5,000. That puts fair value of Bitcoin, you know, like 1.6 to 2 million if it matches gold's network value. So I think it's actually helping Bitcoin's future terminal price.
So you think that if gold settles at 5,000, Bitcoin, you know, you take the gold market cap divided by the number of Bitcoin, then you get 1.6 to $2 million per coin. What's the time frame for us to get there?
Well, I mean, I can see that in 5 years for Bitcoin. So I think
5 years.
Yeah. Yeah. I think
That'd
Bitcoin, Bitcoin doesn't get capped by gold. It actually gets pulled up by gold. And then, because it's growing the monetary base, right?
And then this year, gold's up 60-ish%, Bitcoin's up 18 to 20%, depending on the day. Do you think that on December 31st of 2025, we'll actually look back and could Bitcoin have outperformed gold in 2025, even though it has such a big lead right now?
Yeah, I mean, we have a lot of time. We have 10 weeks. As you know, Bitcoin makes its move in 10 days a year. So are Bitcoin's best days in the fourth quarter? Probably, because we have catalysts, the Fed's easing. We have a shutdown that's been risk off. We have China-US tensions that, look, every time there's a headline on China, like Bitcoin takes a gut punch, right? Because it is money flows and deleveraging. So that goes away. We have seasonality that favors stocks moving up, and stocks moving helps Bitcoin. So to me, the chances of Bitcoin having a huge fourth quarter are really high, and not all of these would be tailwinds for gold. So I wouldn't count. I still think it's possible for Bitcoin to hit 200,000 by the end of the year.
And what about the 4-year cycle? Do you think that that holds, or do you think that that was something that was broken by the institutional participation in the ETFs?
Well, most of the crypto people I speak to expect a 4-year cycle. Mm-hmm. And they're adamant, that maybe Bitcoin peaks early next year. But as you know, when something is so strongly held, it's very unlikely to be true. So either Bitcoin's already peaked or we have a longer cycle. I'm more in the camp that it's a longer cycle.
But there would still be 50+% drawdowns in the future, or there's a kind of cycle is broken and something different?
Yeah, I'm sure there'll be 50% drawdowns because the stock market has more frequent 25% drawdowns. Mm-hmm. I mean, that's when, even though people realize, the stock market's made a lot of progress last 6 years. Mm-hmm. We've had an unusually large number of 25% drawdowns. Mm-hmm. And we probably have another S&P decline of 20% next year. So if the S&P is down 20, Bitcoin could be down 40.
Today's episode is brought to you by EasyBitcoin.app. They offer a simple, rewarding Bitcoin investment experience. With Easy Bitcoin, every recurring buy automatically earns you 1% extra in Bitcoin, and the sats don't stop there. Hold your stack in the app, and you'll collect a 2% annual reward, plus 4.5% APY on any US dollars you park in the USD interest account. You can even opt in to have your interest auto-converted to Bitcoin. It's a simple, set-it-and-forget-it way to grow your Bitcoin. Easy Bitcoin is live right now on iOS and Android. Hit pause, click the link in the description, download the app, and start earning while your Bitcoin stash grows. Your capital is at risk, crypto markets are highly volatile, and this content is informational and not financial advice.
What's funny to me is for years now, I've been hearing folks who I would put in, they grew up in the stock market, they're kind of legacy system, supporters and participants. They don't really get the Bitcoin and crypto thing. They have forever been saying, you guys don't understand. There's a big crash coming. You don't know what a real market downturn is, whatever. And I always just think, I'm like, do these people realize that the people holding Bitcoin have seen 2 drawdowns of over 80% in 4 years? That's never happened in the stock market.
Yeah.
Right. And so in this crazy way, actually the crypto people are more prepared for market volatility than the stock people. But it's like, if you haven't gone through the pain, you just don't think that exists or something, right? And the stock people don't acknowledge the fact that you kind of have to be insane to hold all the volatility in crypto.
Yeah. And actually what I've noticed, and it's not true of but I've met some crypto skilled traders, and a percentage of them are exceptional equity traders.
Interesting.
They've become so good at the EQ of market moves that they're great at stocks. Not every crypto trader, because a lot of crypto traders are just, degens, but so it really does cross over. I think being good at stock investing is not a skill that's learned at Harvard. Some people are just really good at it.